the pressure to sell.
We're encouraged to push our targets over clients.
Inside Canada's big banks,
It's not a customer service or advice-driven environment.
we go undercover to hear what's getting pushed.
You have a credit card limit increase for $8,000.
And the promises made.
The average interest you will get at least 10%.
Bad advice. At what cost?
They're not only getting bad advice, they're getting illegal advice.
This is your marketplace.
Minister Freeland, this is CBC Marketplace. We're hoping to speak to you about a story we're doing about sales pressure within the banks.
Hey guys.
Hey, Erica.
We're going undercover,
And of course, we're going to have hidden cameras rolling.
putting tellers to the test at Canada's Big Five banks,
Hi there.
Where are you?
Good, thanks.
seeing what happens when we go in to make a simple deposit.
I'm just here to make a deposit, actually.
We've heard from current and former employees of the big banks who tell us there are targets to hit.
It's a high-pressure sales environment.
We had high expectations for sales quotas.
We're encouraged to push our targets over clients.
And we've been hearing from you about banks pushing products you don't need or never asked for.
I'd explicitly told them that I didn't want any sort of loan protector service that they offered me.
Kind of noticing that we had kind of high bank fees. It was $9.95 a month through the bank account. And then through his MasterCard, we were seeing different numbers varying from like $30 a month up to like $50 a month.
$95 a month for a useless insurance policy has caused me quite a bit of grief.
All this at a time when financial decisions really matter. And the Big Five made over $50 billion last year. So are the banks actually looking out for us or more interested in making a sale? To find out, we're going in to BMO, CIBC, RBC, Scotiabank, and TD, visiting 2 branches each in Toronto and Vancouver, with our hidden cameras rolling to see for ourselves if we get pitched products.
I want to see if you have any offers right now.
Oh, sure. What kind of offers?
Let's chat.
Oh.
All right. So
Watching along will be Sandy Martin, an independent certified financial planner and a former bank employee.
What is the goal of the bank employee?
It's to sell the products on the shelf and to make you feel good about having purchased them.
So it's just about sales.
Yeah.
At RBC, our tester goes in to deposit $100, but then
you have a credit card limit increase for $8,000. That's cool.
Okay.
and that's not all.
And then you have another one for an upgrade to the Ion Plus visa.
So the harm is that you are treating a moment where somebody assumes they're getting a service as an opportunity to slide in there with a sale. And I think that's kind of gross.
If people have access to credit, how likely are they to use it?
You might not realize how much this is a dangerous thing to have. It can add up really fast.
No pitch when we visit CIBC, but a different story at BMO. After our tester deposits her cash, she's pitched a checking account.
There is no cost for that. So the only condition for the premium plan to have is maintain $6,000 inside the same account.
Not mentioned, if she doesn't maintain $6,000, her account fees double.
There was a lot of sales pressure in every aspect of the bank.
That push to upsell is something this former BMO teller knows all too well.
A lot of people can't keep that balance above $6,000, so they're eventually charged for the premium plan.
The $30?
Yes, I've seen it a lot.
We're concealing his identity and someone else is reading his words because he still works in the financial industry and fears speaking out will cost him his job.
Every week, they would release your results and display your name with what you sold.
Why do you think that email went out?
To shame you, you were scared to lose your job.
We obtain internal documents that show the sales credits BMO employees get for selling things like checking accounts, credit cards, and lines of credit. The more money the bank makes, the more credits the employee earns.
I felt like I had to mislead customers in getting products that they didn't need.
What toll did that take on you?
It was a very unethical thing to do, and I felt like I'm putting them in a worse position.
And what's worse, he says colleagues added products to customers' accounts without their knowledge.
Many times, because they needed to meet their sales targets.
Sound familiar?
Sign up customers or face being fired.
7 years ago, my investigation with CBC's Go Public team revealed the immense pressure employees at all the banks were under to sell.
Already there are calls to better regulate financial titles.
Selling products and services people didn't need just to hit targets. Sometimes even breaking the law, doing things like increasing credit card limits without permission.
It's hard to trust them after seeing incidents like this.
So, has anything changed? At TD, as our tester is depositing her money,
Even since you're a client with us, you're able to get a credit card with us. You don't have to go through a credit check. You don't have to go pay an income.
So you qualify for a credit card. You don't even need an income check.
The ideal situation is for a credit card to be given to somebody who then keeps a balance on it and can't pay it off. But of course the bank wants to sell people credit cards, and of course the barrier to entry is going to be so low it's in the floor.
nothing at Scotiabank. But over at another BMO branch,
It's just actually if you're qualified to get a pre-approved personal line of credit.
our tester is told she's eligible for a $25,000 line of credit.
You would recommend that?
Yeah, I mean, it's not all the client will have this kind of offer.
A line of credit with a slightly lower interest rate can really amplify the small amounts of overspending that add up over time, and suddenly you have something that's incredibly difficult to pay off.
Our hidden camera findings, not surprising to this former BMO employee. He recently quit when the pressure to sell became too much.
I said, I feel like this is wrong.
And what did she say, your manager?
She says, every bank does the same thing. If we do it, at least we get the sales.
And it isn't just the frontline tellers.
If you sold, $500,000 mortgage, it would be worth 500,000 points.
This former Scotiabank senior financial advisor says he was pressured to sell too. We're concealing his identity and someone else is reading his words.
It's not a customer service or advice-driven environment. We're there to sell and make money for the bank.
With the stakes higher, is the advice any better?
So Sandy, your head was literally in your hands.
Oh, it's so bad.
We're back inside the banks after this. Get more Marketplace. Sign up for our weekly newsletter at cbc.ca/marketplace. This is your Marketplace. We're investigating the sales culture inside Canada's big banks, visiting branches to hear the sales pitch, hidden cameras rolling.
Even since you're a client with us, you're able to get a credit card with us.
We're also speaking to current and former employees about the pressure to meet high sales targets.
You have to sell something to that customer, even though they don't need it.
Pricey products you don't need at a time when costs are adding up.
Are you feeling the pinch?
Absolutely.
It's an extra, $100 to $200 a week that we're looking at for a family of four. So
At the grocery store?
Yeah, at the grocery stores.
My mortgage rates are constantly going up, and for my husband and I, it's just so hard for us to make those payments.
I've had quite a few clients cry and, tell me about their hardship.
Tough financial times, what this TD employee is hearing more and more. We're concealing her identity and using a different voice.
It feels awful. I shouldn't have to think more about my target than the client's well-being and their interests.
She says she's got a huge target to sell investments, even as some clients say they have bills to pay.
I have had an increase of clients upset, having to take money out of their children's RESPs. If they need to take money out, we have to do what we can to sort of stop it.
So to be clear, do you feel you're under pressure to get customers to make financial decisions that may not be in their best interest?
100%.
And she says there's proof. She secretly recorded a coaching session with her manager about pushing customers. Her words are read by someone else to protect the insider's identity.
When I hear you talking to them, it's almost like you think of them a lot. So that's why you don't want to put force on them. Because you're thinking about them, it kind of backfires for you in meeting your goal.
I don't think it's backfiring. I think I'm actually helping the customer. It's upsetting because this is the corporation I work for, and this is all driven by greed.
Seems like we need to do more digging. So we're heading back inside the banks, this time to test what kind of financial advice we get from folks beyond the tellers.
Let's hook up this one to your button cam.
Those trusted financial advisors and planners.
There we go. It's now recording.
Helping us out, our colleague Kimberly. She's going undercover.
If they ask, you have some debt, credit card debt, about $17,000.
Telling advisors she wants to invest a $50,000 inheritance. Not true, but we're testing the advice we get. First up, what do the advisors tell us to do about that credit card debt?
Hello. I'm just wondering if there's an advisor that I can meet with.
At Scotiabank,
you don't have to pay out all of it, but definitely pay out a portion.
Yep, just pay off a portion of that debt. Invest the rest. Bad advice, says certified financial planner Sandy Martin.
There is no way that you can make 19.99% on your investment. It just won't happen. Of course, you should pay your credit card debt off.
The advisor does not get paid to pay off the debt.
You don't get any sales points.
No, I don't get any points for that.
Over at TD,
you can do a minimum payment.
Minimum payment? At RBC, this advisor also tells us to just pay off some.
For example, $7,000 or $10,000.
Or she suggests taking out a line of credit to pay it off.
I personally do not think line of credit as a borrowing thing.
Encouraging somebody to only pay off a little bit of their debt and then move it around to get a little bit less, like a lower interest rate, that is still bad advice.
As for that inheritance, all the advisors recommend investing in mutual funds that earn them sales credits. They're not allowed to guarantee the returns on those investments, so will they? At CIBC, seems like it's a sure thing.
The average interest you will get at least 10%.
Right.
Absolutely more than 10%. That is why I'm saying keep it there.
He's guaranteeing absolutely more than 10%. Can he do that?
No. Oh, no. He absolutely unequivocally cannot guarantee any number from a mutual fund.
And there's more. Financial advisors tell us they felt they had to sometimes cross the line just to sell those investments. The TD Insider recorded another manager telling her to snoop around a client's accounts. His words are read by someone else.
See if the client has got cash sitting somewhere. Because if you don't profile, that's where the big money is.
Big money that could go toward a product the bank wants to sell. TD tells us the recorded conversations are completely unacceptable and do not meet their code of conduct. As for the former Scotiabank advisor, his breaking point, the death of a client's husband.
I mentioned this to my direct supervisor. The first question he asked me was, are we still getting their investments?
That was the first thing he cared about.
That's when it really hit me that there's no compassion at all. It's all about the numbers.
How do those numbers play out when it comes to investments? Back on Hidden Camera, we're asking about the fees charged on those mutual funds. They're important because a typical fee of 2.5% could eat up almost half the value of your portfolio over 25 years. So, our final check, what will advisors who have to sell mutual funds to hit targets tell us about the fees? At BMO,
take it out of your return. Yeah.
The advisor incorrectly says the fees are only charged on any profit that $50,000 inheritance earns, not the nest egg itself.
Just the returns. So if the return was $5,000, it wouldn't be the $55,000 that they take it off.
No.
At TD, we're told not to worry about the fees.
A lot of clients won't even notice because it's very insignificant.
We're also told incorrectly they're only charged on any profit.
Will that 1.9% also be taken from the 50,000?
No, it's not taken out from your own principal.
RBC gets it right, says the fees apply to the whole investment, but claims they're no big deal.
As long as you're happy with this return, You
Right.
don't have to worry about
I
the fees.
see. Okay.
At Scotia, the advisor claims he doesn't know how the fees work.
I heard they only take it out of the gains. So let's say if your 50,000 grows to 55,000, that 5,000 gain extension, that's where they take the 2% out of. I'm not too sure how they calculate it.
So Sandy, your head was literally in your hands.
Oh, it's so bad. And I genuinely believe that those frontline advisors don't know the answer. They are guessing.
Licensed mutual fund dealers.
Oh, that bar is so low.
All told, only one advisor gives clear and correct info on mutual fund fees.
Do you think the pressure to sell products was behind some of the advice we got?
Almost all of the advice that you got, I think, was influenced very heavily by the pressure to sell financial products.
Hey, Duff, Erica Johnson with CBC.
Duff Conacher is a consumer advocate who's kept an eye on the banks for decades. His take on what we've seen?
They're not only getting bad advice, they're getting illegal advice.
He's talking about clauses in the Bank Act that require banks to not take advantage of customers and offer appropriate products and services.
So what we documented, you say, is breaking the law?
Yes, yeah, I think very clearly the advice that was given violates the duty in the Bank Act for the banks to act in the financial interests of their customers.
All 5 banks declined our request for an interview, pointed us to the Canadian Bankers Association. In a statement, it says our findings do not reflect the experience millions of Canadians have every day at the banks. They add that a more formal analysis of the client's needs is expected to be performed when moving from an initial conversation to establishing an investment.
So if the big banks aren't looking out for the little guy, who is?
The agency just needs to follow Law Enforcement 101.
Maybe the finance minister can tell us after the break. Got a story you think Marketplace should investigate? Reach out to us at marketplace@cbc.ca. This is your Marketplace. From the misleading
Absolutely more than 10%.
to the downright wrong.
No, it's not taken from your own principal.
Duff Conacher says the bank's regulator is letting them off the hook.
The agency just needs to follow Law Enforcement 101, which means you're doing regular unannounced inspections. When you catch violations, penalties have to be high enough to take away any profit that the bank made from violating the law.
The Financial Consumer Agency of Canada won't talk on camera. In a statement, it says it's had concerns about bank sales practices and takes the matter very seriously. Adding, banks should only sell products to consumers if it's appropriate and must ensure employees have the skills to fulfill that responsibility. Ultimately, the buck stops with Finance Minister Chrystia Freeland. For weeks, we've requested an interview, but her office says no. We learned she's attending this mining conference in Toronto. So we try again in person.
Minister Freeland, this is CBC Marketplace. We're hoping to speak to you about a story we're doing about sales pressure within the banks.
We keep trying.
Minister Freeland, do you have a moment to speak with CBC Marketplace? We've been documenting sales pressure within the banks. We found bank employees giving inaccurate advice.
But no luck. Later, her office sends a statement saying the government has zero tolerance for banks offering misleading information or inappropriate financial services. And they say they've taken action, added consumer protections to the Bank Act. Those protections were in place during our hidden camera test. So, until consumers are better protected, our expert has this message.
Just do a little bit of research into the evidence of good, sound financial advice, and then you're going to be hearing these pitches with very different ears. That's what I want people to do.